Hello and welcome back to Digital Assets Daily. Good morning, good afternoon, or good evening, wherever you are in your corner of the world. Tonight I have a little discussion about moving money to all corners of the world. Obviously taken directly from Ripple's homepage, but we're going to get into a discussion where that will be the theme of today's video. I'm going to be playing you a few videos and then we're going to get into some direct content.
It's a moment where we look at the utility value here, perhaps, and differentiate from the speculative.
I think one of the reasons that 2020 will be very important is that regulatorily, that's a word, the clarity is getting better. And I mean that globally. Countries like Singapore and Thailand and Switzerland and Japan. I think the U.S. has still an opportunity to do more there, but I think we will probably see that in 2020, and I think that helps catapult the whole industry. I also think you've gone from an industry that has been a little bit in the shadows and in a history of crypto.
Very much in the shadows.
Yeah. I remember actually, you and I were both at Davos, and someone early on in my arrival there, so was like, crypto's still a bad word here. I was like, and
it's a misunderstood word.
It is, and I think a lot of what I'm doing and a lot of what I did in Davos is meeting with regulators, meeting with very senior people at banks and explaining to them how crypto can be used, how specifically XRP can be used to solve a real problem. Not to circumvent regulation, not to circumvent any government. And I think once people understand that, they very quickly become disarmed. It's no longer a bad word.
And as we get into these videos, pay close attention to what Brad Garlinghouse states over and over again. Regulatory clarity. And here we go with the next video.
Clarity, and that's an important one. So there are markets, any remittance market that has a lot of US dollar, euro remittances into other countries, that's a high priority. But if you don't have regulatory clarity, that's a challenge to those markets. All right, we're going to get into another video.
You step back until you have that regulatory clarity because you don't waste the time.
I wouldn't say we step back. We engage. It means a lot of frequent flyer miles for me.
Okay, so you're engaging with India.
For sure. But back to what we said about Davos, it's sitting down with key regulators and explaining to them this is not circumventing a KYC, know your customer check. It's not circumventing anti-money laundering checks. It's not. Once the regulators understand you're not circumventing regulatory frameworks, they get very comfortable very quickly. And they lean in because they understand this is actually helping inclusion in the financial system. The people who are most burdened by remittance costs are those that can least afford it. And that's, I think we all should care.
And what was again the consistent theme of each of these videos was regulatory clarity.
I do feel like the regulators there are all stepping up. China is another example with, they're even talking about, a yuan digital coin here.
Right.
Who's leading?
Well, it depends a little bit how we talk about leading. China, to your point, it's been fascinating to see. They really, through mining power, control the Bitcoin blockchain. You have 4 miners in China that represent something like 60+% of mining capacity, and 80% of mining capacity is based in China for both Bitcoin and Ether. So in many ways, I think China's been incredibly strategic about how they think about that.
Yes.
And I look at the U.S. and I say, hey, U.S., here we are in downtown New York, we could and should, I think, do more for that clarity to allow for more investment. But you see, I think, a lot of countries around the world seeing that this is a technical wave, this is a major step, and they want to invest in it. They want to see companies continue to invest, and I think that's good for the economy.
All right, there you guys have it. 1, 2, 3, 4, 5 videos of Brad Garlinghouse, the CEO of Ripple, directly stating over and over time again, regulatory clarity. Now, from a different perspective in today's content, Stellar's Jed McCaleb, crypto doesn't need more regulation. It needs clarity. So again, you guys can see there's a consistent theme in the currencies of regulatory clarity. Crypto Titans is a series of personal interviews conducted by CoinMarketCap with prominent and forward-thinking minds tinkering on and behind the scenes of the cryptocurrency landscape. And here, Jed McCaleb wears many hats Before he co-founded Stellar, of which he is the CTO, he also founded and served as CTO of Ripple until 2013. Even earlier than that, which goes back to the very origins of cryptocurrency, McCaleb founded the now infamous Mt. Gox after reading about Bitcoin online, creating the wildly successful and then wildly unsuccessful first Bitcoin's exchange in just 2 weeks. As one of the earlier crypto pioneers, McCaleb has noticed a gradual maturity in the space, and as he sees both people and projects come in with higher quality ideas and better plans, and even during the middle of an issue at hand, McCaleb's philosophy about cryptocurrency has not changed, even as what seems like the entire world has. It's about building something that people can actually use. And again, he's stating throughout this article as well that it needs regulatory clarity. Again, echoing the sound of Ripple currency CEO Brad Garlinghouse. We're going to move into the next article. The SEC and OCC issue first regulatory clarifications for stablecoins. The U.S. Office of the Comptroller of the Currency, the OCC, has published fresh guidance officially clarifying national banks can provide services to stablecoin issuers in the U.S. The Office of the Comptroller of Currency, OCC, and the Securities and Exchange Commission, the SEC, published stablecoin guidance Monday, providing the first detailed national guidance on how cryptocurrencies backed by fiat currencies should be treated under law. And prior to Monday's notices, there was no federal clarity around stablecoins. In the next article, meet in the middle, crypto companies and banks are evolving together. So you can see this theme again following under the regulation, and all of this starts seamlessly falling into order. Some say that meaningful change happens gradually. Others insist it erupts unexpectedly. This week, we saw that both are true. Earlier this week, the Wyoming Banking Board voted to approve the application from San Francisco-based crypto exchange Kraken for a special purpose depository institution, the SPDI banking charter. Yes, one of crypto's industry's oldest exchanges has now become a bank. I want to thank ECK for sending that article. And in the next article of discussion, the SEC FinHub staff statement on the OCC's interpretation. The Security and Exchange Commission Strategic Hub for Innovation and Financial Technology staff, FinHub staff, issues a statement on an interpretation published by the OCC. Addressing the authority of national banks and federal savings associations to hold stablecoin reserves, the OCC has limited its interpretation to holding reserves of a stablecoin associated with hosted wallets that is backed by a single fiat currency and redeemable by the holder of the stablecoin on a one-to-one basis for the underlying fiat currency upon submission of a redemption request to the issuer. Whether a particular digital asset, including one labeled as stablecoin, is a security under the federal's securities laws is inherently a facts and circumstances determination. This determination requires a careful analysis of the nature of the instrument, including the rights it purports to convey, and how it is offered and sold. And we believe that market participants may structure and sell a digital asset in such a way that it does not constitute a security and implicate the registration, reporting, and other requirements of the federal's securities laws. However, the label or terminology used to describe a digital asset or a person engaging in or providing financial activities or services involving a digital asset may not necessarily align with how that asset, activity, or service is defined under the laws and rules administered by the SEC. And we encourage parties seeking to structure and sell a digital asset or to engage in related activities to contact the FinHub. Staff through the sec.gov FinHub with any questions that may have to help ensure that such digital assets are structured, marketed, and operated in compliance with the federal securities laws, and the staff stands ready to engage with market participants to assist them to consider providing, if appropriate, a no-action position regarding whether activities with respect to a specific digital asset, whether it may invoke the application of the federal securities laws. And for that, I want to thank at the standard 1945, and a shout out to England from the United Kingdom for that. And I want to follow that up with another quick video from the CEO of Ripple, Brad Garlinghouse, because I want to connect that to his statement here. Let's play the video really quick.
For Ripple, building a platform that could perhaps substitute XRP for a Fed coin one day, or
when we think
some
about
other...
the XRP ledger as an open source technology, we think about how do we make it really useful for the customers we work with. We also think about how do we make it extensible and how do we participate in that open source community in a way that makes it extensible to other types of customers. But could central banks? Sure, they could use aspects of that.
Could it be more efficient, what they create one day?
Yeah, and that ultimately is the underpinning I think we all focus on. How can we make this more efficient for our customers? And right now the customers we focus on are commercial banks, payment providers. We certainly are thinking about other types of customers we could serve. I mean, I have made the point, I don't know if I've ever said it on air, but I've made the point that in the earliest days of Amazon, it's called Amazon Books. It was a bookseller. It competed with Barnes & Noble, competed with Borders, and when I think about Ripple today is viewed as a cross-border payments company. We view ourselves as a blockchain infrastructure company. The first vertical we've done is cross-border payments. We want to make sure we're winning in cross-border payments before we do another vertical, but we will certainly do other verticals leveraging these technologies.
So you're open, potentially in the future at some point, to using the Fed coin or the one coin? I'm pushing because the head of blockchain technology at JP Morgan told me if the Fed came up with a coin, they'd dump JP Morgan coin. So I'm asking you whether you're open to the possibility of...
Sure. I mean,
yeah.
I think I'm very open. Even if the Fed in the United States is using a coin, you still have a cross-border settlement dynamic where
yes.
if you have central banks around the world using their own digital asset, I don't think it changes the need for a cross-border neutral
something
settlement.
in the middle, like an XRP.
And XRP has been extremely efficient. I mean, look,
okay.
We obviously have a vested interest in that, and we're not bashful about that, but XRP is extremely efficient from a technical point of view in terms of speed, in terms of scalability, in terms of cost, where I'm a Bitcoin holder, but it's not going to solve a payments problem when the transaction time and transaction cost is almost 1,000x what it is for XRP.
All right, now hear what he said very carefully. If you need to rewind and play this again as many times as you like and replay the entire video from start to finish, I think the second or third time through, it starts to get more exciting. If we go back to this here, the SEC FinHub staff statement on OCC interpretation. And again, this is dealing with the stable coins. And again, here as he stated, for example, if the Fed comes out with a Fed coin, that would sort of be their stable coin, but it would start connecting other banking stable coins is what they're stating. So again, remember that XRP is designed for more efficiency, to transfer all the money. So again, having these stable coins approved, that just gets things one step closer for XRP to do what it's designed to do and be the bridge asset for all of these stable coins. Which again leads us into another article which kind of summarizes up again of our conversation. Federally chartered banks and thrifts may engage in certain stablecoin activities. This is a short article, so let's go through it. The Office of the Comptroller of the Currency, OCC, today published a letter clarifying National Banks and Federal Savings Association authority to hold reserves on behalf of customers who issue certain stablecoins. Stablecoins refer to cryptocurrency backed by an asset, such as a fiat currency, including US dollars or other foreign currency. For example, Stronghold, a USD-backed currency that basically runs on the Stellar blockchain. And again, as you think into the Fed, suppose they did choose Stellar, as Stellar is massively expanding with the stablecoins. As Brad Garlinghouse states, XRP would transfer all of those. Now back into it, national banks and federal savings associations currently engage in stablecoin-related activities involving billions of dollars each day. Acting Comptroller of the Currency, Brian P. Brooks, said, "This opinion provides greater regulatory certainty for banks within the federal banking system to provide those client services in a safe and sound manner." The letter responds to questions regarding the application of stablecoin-related bank activities. It concludes national banks and federal savings associations may hold reserves on behalf of customers who issue stablecoins in situations where the coins are held in hosted wallets. The letter addresses the use of stablecoins backed by a single fiat currency on a one-to-one basis, where the bank verifies at least daily that reserve account balances meet or exceed the number of the issuer's outstanding stablecoins. Now let's go back just a step where Brad Garlinghouse states, "We view ourselves as a blockchain infrastructure company." And what is the major blockchain infrastructure that is associated with XRP but the Interledger? And for those of you who are new, this will probably be very exciting for you. And even for those of you who have been around for years, invested in XRP, it is still as exciting to hear it again today as it is the first time. And let's play this video for you right now.
So some people have heard me say this before, but I'll throw it out to the audience. What is Interledger's total addressable market size? All the money. Nobody wanted to feed it. Yeah, it's all the money, because what we're really talking about with this idea of the Internet of Value is creating a single global payment network that connects literally everyone and processes maybe not 100%, but 90+% of all the money. That's what we're talking about.
As you hear the theme of the entire video today of the Ripple CEO Brad Garlinghouse stating regulatory clarity, then we have Jed McCaleb stating regulatory clarity, then we have SEC and the OCC stating now we're beginning the first phases of regulatory clarity. So to me, this is exciting. Very bullish news. This is the backbone of what enables and allows everything that we dream of to begin taking place and to begin happening. This is the backbone of our dreams starting to come true. And remember, guys, this is just the beginning. We are still early. For those of you who have the patience to hold and wait or hodl, it will be well rewarding and well worth your time. All right, guys, I'm going to leave you with a final thought. Don't change so people will like you. Be yourself, and the right people will love the real you. And remember, this is not financial advice. It is for entertainment purposes only. Much love, and we will catch you in the next one.